Okay, welcome back to Introduction to Financial Services Industry. This video is going to deal briefly with what I've titled here, Asset Product Reference Data, or Asset Reference Data, or Product Reference Data, or Security Master Reference Data. But it's going to talk a little bit about the reference data that's used in processing securities transactions. So again, this is a high-level interview. This is not meant to be a deep dive, and we're not going to give any financial advice. So product reference data is also called security master data. Some people call it product master data. Some people call it asset master data. Different firms have different terms. Sometimes it's called product indicative data. But basically what it is it's the underlying data that's required in order to process a successful securities transaction, right? So let's talk about this a little bit. Security master product reference data is a necessary piece of the foundation for processing all securities transactions in the financial industry. So what do I mean by that? I mean that there's certain data that you need to process any type of transaction, whether it's an FX transaction, or it's an equity trade, or it's a stock loan, or it's buying a corporate bond or doing a repo. Anything you do, there's a certain underlying data. You have to be able to identify what is the product, what is the asset. So people sometimes use the word asset, sometimes they use the word product, sometimes they use the word security, but underlying all these terms, they're trying to get to the same thing. They're trying to say, what is the thing, the security, the product, the asset? What is the thing that we're trading or we're processing in this transaction, right? Is it a stock? Is it a bond? Is it a currency? Is it a precious metal? Is it an option? What is the security which a client will buy or sell and hold as an asset, right? Because you buy and sell securities as assets for your portfolio, right? They're assets. There's things with monetary value. Securities and securities products are assets that a client can buy and can hold and has some monetary value. So in order to do those transactions, there are certain things, underlying data that you need to be able to handle those transactions. You need to be able to know, well, what is the product? What's the descriptive information that describes this product? And what's the unique identification for the product? So all that information has to be controlled, and it has to be, as much as possible, we handle it in an automated fashion, right? So without complete, timely, accurate, and fresh data, our clients can't buy, sell, and trade securities effectively, and we can't clear them, right? So because data is always changing, right? The ticker symbol on a security might change, or some other indicative data on a security might change, right? So the data on the securities are constantly changing, and firms have to track this so that they have the current accurate data that describes that asset, that product, that security, that thing that a client is buying and selling, right? Okay, our business requires the data be available and that the content be of high quality that's free of errors, right? When there are errors in the data, that creates a break for the operations people, right? That automatic transaction, that straight through process stops, it breaks. And an operations person, a human being, a clerk, somebody has to go in and manually correct the data. Maybe it was the wrong QSIP that was put in. Maybe it was the wrong product description. Maybe the product description didn't have the maturity date or some other information correctly included. So a human being has to come in and manually correct that data where there's a break, where it isn't available or it's incorrect. And this slows down the process and it creates great cost to a brokerage firm. So inaccurate, incorrect data creates significant risks, right? Because it's a risk problem, because you need to manage the risk. You need to know what you are buying and selling and trading and what you are holding. If you don't know what you're holding, if I went into a library and that library had 10,000 books in it, but I don't know what's the topic of the book, who's the author of the book, what's the Dewey Decimal reference number to find the book, what shelf is it on? If I don't have any of that information, I can't value the books. I can't say, what do I have? I don't know what I have. So a risk organization has to understand what are the assets their customers hold, okay, what their values, in order to do all that work, it requires underlying reference data that has to be maintained by any firm. Regulators also place an increased emphasis on this data and it being correct. And there's lots of vendors that provide this data. Bloomberg provides this data. IDC provides this data. There's multiple versions. Reuters provides this data. Lots of firms are out there. There's a Reuters spinoff that skips my, I don't recall it off the top of my head, but there's a lot of firms that provide this data. Okay, so why do we need this data? Okay, first is risk management, as I discussed a moment ago. We want to accurately assess our risk. We want to optimize our credit policy. We want to reduce operational risk, those breaks I was referring to. So the risk department in any firm, any bank or broker or any firm needs to have this data so they can do their job. For trade execution, we need this data because we need to know is this the correct security we're buying? What's the ticker? What's the symbol? What's the what exchanges is it traded on, right? So we want to reduce trade failures. Trade failures cause cost to a firm every time a trade fails. Reduce execution costs, reduce capital expenditures. So the trade execution group with any firm needs this data. For regulatory compliance, regulatory reporting, all reference data is needed to be able to understand what are the products that are held and what are the risks associated with them. So to accurately assess risk, to optimize credit policy, and reduce operational risk. Again, reduce operational risk. The client experience. Reference data is very important for client experience because a client wants to buy something and know that what they bought is the correct product. And they want to have all that data correct in their statements. When you go to a statement, your statement says you have product XYZ, or you have a particular bond, or you have a particular equity. Your statement wants to have all the accurate descriptive information related to that product. And that information has to be accurate. There's a regulatory requirements for firms to provide accurate, timely information. Also, we want to improve our SDP. It's also profitability and segmentation, right? So basically, having accurate, clean data makes the whole process go smoother for a firm, and it makes the firm more profitable. This is where we get into the term that's used is STP, straight through process. When the process operates correctly, it's a seamless, straight through automated process. And when the data is not correct, that straight through seamless process breaks down. And when that happens, that generates risk and that generates cost for any brokerage firm. Just on this, I just want to plug in, again, I have no affiliation with the firm Cognizant, but Cognizant has some really good material on the internet for free for your watching if you want to learn more about this particular slide. So what is Product Master Reference Indicative Data? It's a repository of reference data centralized to manage security identification and all the descriptive data that describes a particular asset, particular security, right? Security master data at major firms contains several thousand data elements, right? So I've worked at several major firms, and in those firms, if somebody said, well, how many fields of data do you have? And for instance, a debt product A debt product can have over 1,000 different fields of data, different data elements, different pieces of data, different descriptive pieces of information that are needed for a particular security. There are less fields required for equities and more for debt products. But these include descriptive data that provide information on who was the issuer of the data, what's the is it a bond, what type of product it is, what markers is a trade in, what are its symbols, how to identify it, all that information. It might also contain information like what's the industry sector? Is this security part of a particular index? Is this security? What are the ratings of this if it's a bond? So there's a lot of information that's kept in the product reference data. Firms will combine, arbitrate, cleanse external market data feeds and internal sources to create their own single vision of the data. So what a firm might do is they might get a feed from Bloomberg, and they get feeds from the exchanges, and they get feeds from different vendors. They might get a feed from IDC, and they might have their own internal identifiers. And what a firm will do is take all this different data and take it every day, and they'll arbitrate it and combine it to form a single golden copy database, a master database that's used for all the applications, all the business units in that firm, because you want everybody in your firm to be talking the same language with the same information. You know, if the credit department is looking at security, they want to be able to say, yes, we've got the same information as security as the trading department. We don't want to have different parts of the firm using different underlying data to describe a particular product, because we want to avoid confusion. If the ratings of this security are AAA, and it's a AAA bond issued by a certain issuer, we want everybody in the firm to have that same set of information and be on the same page. That's what they mean by golden copy. So by centralizing management, distribution of security and corporate actions information, a security master product reference data solution provides a firm-wide data consistency for accurate, high quality data of integrity. So this is a very important concept that most brokerage firms, most large firms, most asset managers will have some product. In some cases, firms will outsource this completely to a data vendor and just source in somebody else's data. Now, one of the reasons why I bring this up is I mentioned this on a separate presentation where I was talking about product identifiers. But for instance, what you would have in your reference data is all the different reference items you use to identify a product, right? What's the ticker? What's the symbol? What's the RIC code? What's the QSIN numbers? What's the ISIN numbers? What are the CIDOL numbers? What are sometimes brokerage firms have their own firm-wide identifier. Merrill Lynch used to have what they call the Merrill ID, where they might have dummy codes for identifying securities. And there are other external identifiers that are also maybe not industry standard, but like a Bloomberg global identifier, or different markets in Germany and Switzerland and Japan and other countries have their own identifier. So you want to have that data. That would be in your security master. So features of an asset or security master product reference data solution would be asset coverage, right? So first thing is there are millions of securities out there. And if you're an asset manager and you're only looking at maybe 10,000, 20,000, 50,000 securities, you only need the reference data on those 50,000 securities. You don't need the universe of 10 million or 20 million different securities. But if you're trading in mortgage-backed securities and or mutual funds and municipal securities, you're going to need more and more data because there's a lot more of them. So you have to have coverage, because if your client comes in and says, I want to buy security XYZ, and you go into your systems and your system says, well, we don't have that security in our system, that means somebody has to go in and input all that data and research all that data and put it into the system. So you have to have coverage of all the assets that your firm is going to cover, your firm is going to do business in. You also have to have standardization of views of the data. You want to have centralized operations viewpoint. You want to have legal entity information for the risk people. So if this, let's say this is you've got securities, you've got bonds that are issued by JudgeCo, and you've also got stock in a company called JudgeCo. And you've got different corporate bonds issued by JudgeCo. And then one day you find out that JudgeCo is going out of business. They're filing for bankruptcy. Your risk department wants to know that. Your risk department wants to know, okay, what are all the different products, bonds and preferred shares and common shares and any other products that were issued by JudgeCo? So they'll know that when that firm goes under, what's the market exposure? What's the risk exposure? You also need data validation. You need tools for making for greater STP to manage incomplete and inaccurate data. And you want to do data risk. So managing this data is very expensive. That's one of the points I want to get in that slide. In a large firm where you're going to have several million securities you're going to be managing, they're going to have in your database, it takes quite a large team, a large infrastructure to manage this. So examples where security master data is important, again, regulatory requirements, this reference data is very, very important. That you're correctly identifying and have all the right data to describe the assets that you're trading. I gave the example of ratings. If you're trading a security, you've got clients who hold security, and let's say it's AAA, and then the rating company comes out tonight and says, no, that we've downgraded it. That's now AA. You need to update all your systems. So all your systems and your customers and your statements and all your information will now reflect the fact that that security is now AA, because you don't want to produce your statements and send statements out to your client, and the client sees a security on the statement, and your statement says it's a AAA security, when in fact the ratings organizations have downgraded a AA. A brokerage firm can't do that. That would be a regulatory violation. Also, it creates a risk problem. So having that data correct, all that underlying descriptive information has to be correct. Callability, I think I discussed this in an earlier presentation. For a bond, it's very important. Is this bond callable? And maybe the bond is going to get called. Hard to borrow is another example. Certain securities in the stock lending area, it's important to identify if it's a hard to borrow security. Matrix pricing relationships, contingent convertible securities are another very good example where it's important for the firm and the clients to understand the underlying, is the underlying asset a contingent convertible? So corporate actions, examples of where you're going to process corporate actions, they're going to have an impact on your reference data. Those are things like corporate reorganizations, splits, mergers, acquisitions, spin-offs, lots of things, symbol changes. All these things that can happen as corporate actions will require updates to the product's underlying reference data. Also, there's a number of things that can happen that will affect the underlying price. And that information has to be correctly reflected in the product reference data. So dividend payments, interest payments, voluntary tender offers, rights offers, convertible securities, warrants, redemption of municipals and corporate bonds. All these things will affect price. So you need to provide your end client with accurate information. Your firm needs this information so that you can manage your own risk, and you need it for the underlying processing and the security of any trade. So there's really nothing you can do without this sort of very complex, accurate reference data to describe the securities, the assets, the products that your clients are buying and selling. So I hope that answers some questions. And if you have any questions, please contact me. My email is listed here. And I hope you enjoyed this quick presentation. Thank you and have a nice day.